Welcome to Neeker's Bullpen. Today is going to be a little bit of a fun day here. So, yesterday I showed you a neat little thing, which was our thesis explaining how things are going to play out. What you're seeing right now is what today's thesis is going to look like. And right now I'm going to show you what yesterday's thesis was, okay? Let's go over to yesterday's thesis. There's yesterday's thesis. It states that if the price breaks over 393.60 area, the SPY will start retesting lower support levels. There you go. It did exactly that. It started breaking down, right? And then we got down to 392. We got down to 392s where it also stated, all right, meaning that it cannot hold above that range. The 392.28 may not hold the price any longer. There you go. It did not hold the price any longer. Right here on this, as you see, it says 390.25 area is the last line of defense, and I spelled that wrong. Before the price will drop to 384.82. And if you look at today's SPY, right there you go, there you have it. It dropped down to 384.50, and we're kind of bouncing right here at 384.82 right now is where we've been kind of dancing around at. That was yesterday's thesis, explaining everything how things played out, and so far everything is played out. All right. And that's awesome. That means we got something going on. So getting right to it, here's today's thesis, sitting right here. Now we're under 387.74 at this point, 384.82. If we can get and break above this, you see how it's already created a tap here. Whoops, hold on. Give me a split second here. Let me do some arranging. All right, there we go. You see how you have a tap here and a tap here. And then, of course, we're getting closer and closer back to 384.74. Now, if we can continue to hold this intraday line of support, we can get that breakout and come up and re-tap up here at 387.84, which is the descending line of support, which it was sitting on beforehand. There's the descending line of support down here on the right, the bottom right chart. That little handle right there. All right. Let's move over to the hourly real quick. We don't need that many right there. See how it's that little descending line of support? And there we go. Let's zoom in right here. And see, that's what I'm talking about right there. It broke down past here, and now we're under 384.82, 384.74 is what I got right now. I try to redo my thesis every day to make sure that I'm looking at it objectively. I'm not looking at it with color-coded eyes. So there you go. Now we kind of got that little, this is a little J hook right here. So if we can't get over 384.74, we're going to continue going down to around 380. Okay, and as you see right here in the middle chart, there it is, 380 level. If we can't hold 384.74, we're going to come down to 380.38. Now, if we can get over, right, we're going to come back, retest this line of support. It's going to become resistance. 388, 387, 82, around that area, right? These numbers are not exact. This is not exact science. All we can do is get ourselves in an area of where it could possibly go. Why is this important? Because let's say it sticks right here around 384.74 all the way to the open, right? It keeps going. This is a ascending triangle. See that right there? All this right here, flat line, ascending support. That is an ascending triangle. So if it breaks out, I know that I can buy I know I can buy either options or buy the stock right here around 384.75, 384.82, and ride the wave up to back up here to the support line of 387.76. That is more than 2R, 2 times risk reward to be able to take profits. That's why these theses are important. It gives you a range of where you need to be in and out to take profit. That's all these theses are. As long as your thesis is playing out and you're able to take profit, you have made a good day. All right, and you've made a correct thesis. Now, a lot of people will sit there and go, "Oh, this is going. It fell down. It's going to come back up." Yes, it did fall down. That right here, folks. All right, actually from up here, right? Because the price ended at 387.84, 86, whatever. All this little silliness right there. That's that's the price right there. So it closed right up here, right? And then as you see, she started moving down. This is the gap. This is the process of the gap down. A lot of y'all don't have extended hours on your charts. This right here, this is post-market. All this right here is post-market. This is pre-market. Okay? So when you're looking at a daily chart, all of a sudden this thing just says it's like down here. Okay? This is why. This is the process of how this worked out. And you see it on you see it over here a little bit more so on the 1 minute chart. Let me scooch it over a little bit. Do, 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 do. I'm no master at this. Can't you tell? So there we go. See how we guys just start breaking down here. This is the 1 minute chart versus the 30-minute chart, right? You just see it in more detail, right? All you're doing is seeing how this is playing out on the 1 minute versus the 30 minute. How each one of these candles actually got formed on the 1 minute versus each 30-minute candle. That's all that is. That's the only difference. Here's the 3 minute right here in the middle. Same thing. Comes down, breaks, hits our level, right? Look at that. Hits our level, breaks down, retests it. Uh, and there you go. All right, so now we're now we're here at 384.74, and this is where we're gonna be sticking around for this moment. Now let's put a 1 minute chart. Here we go. Same thing, same scenario, right there. We broke down under 384.74, got to 382.50, okay, and now we're kind of marching our way back up. Now again, as long as we keep marching our way back up, right, we get that breakout right here, we got a continuation. If it fails, this is a bullish signal. A ascending triangle is a bullish signal, especially after a $3 drop. Actually, that's more than $3. That's 87. That's a $5 drop. Okay, on a $5 drop, and then it comes back to 384.74. It's very possible she's going to come back and retest, or roughly around here about 387, and that's a good thing. That's what we're looking for. That means we can make money off of this move. Now, what if we want to make money on both sides? Good question. Glad you asked that. If it rejects right here at 387.75, you can get ready to start short selling this back down, okay, to 384.74. Do not try to go farther than that because it's very, very possible that it could just bounce here, come down, slap this one last time, and then slam all the way back up to 392.02. Do not get caught in that trying to catch the and get caught. Follow the levels as they sit, which will increase your profits and minimize your risk. All right. Now, let's say it actually taps, comes down a little bit, but not all the way, right? Breaks through. Then you get a retap. Okay. So, if you want to buy the stock from 387, from 388, 387.75, whatever it may be, and then go up to 392.02, you want to make sure you catch the push over. All right. Make sure you set a tight stop loss. I usually recommend a 5 to 10 cent stop loss because if it does come up and retest, then if it retests, you'll be fine. It will not break under, as long as it doesn't break under this descending line of support and your stop loss is under that support, you will have the continuation and go up further. You could even double down. Make sure you add whatever you add in to, if you double down on this position, make sure you add that to your stop loss too. So it takes you all the way out if in fact it does come back and drop down on you. You want to make sure you cut losses quickly and make sure you secure profits along the way. So that's how. So this is how it's going to play out. How I see this playing out. All right, we're going to break out of here. We're going to make our way to 388, 387, 387.70 for 7, and then we're going to start kind of trickling down a little bit and probably hit it again a couple of times. If we can get over it, then I'm going to be securing profits along the way. And then, of course, I'll be getting ready to sell between A and B, all right, if it can get up that high. Will it get up that high? That's a good doggone question. But here's the thing. If it comes up and breaks down, I'm going to be looking for the retest, okay, or the pullback, a lower high, and catch us to 380. All right. Now, I hear right now, what if it just keeps dropping? Then you don't touch it. Do not chase it. That is the key thing. That is your other golden nugget, folks. Do not chase it. If you think this is going to falter and break down under 384.74, fine. Short sell it. Short sell it with a tight stop loss. Put your entry right here, 384. Say if it breaks up a little bit, right? Put your entry at 384.74. Once you're tagged in, put your stop loss set at 384, 384.85, and leave it alone. If it breaks, it goes up, you're out. You risk very little to no money. If it keeps going, good job, you caught it at 380. However, if it just comes up and just tanks before you can pop in a position, do not try to chase that thing. You're more likely going to get caught on a red knife, right, than you would making profits. Because as soon as that thing can drop down, it can jump right back up. And if you don't have your stop loss in, because you're throwing out mental stop loss, which I know a lot of people try to do, if you do a mental stop loss, you're not going to get out fast enough. A person's reaction, natural reaction, is at least 2 seconds. All right, because it takes your brain a second to recognize what's going on. Two, you have to react. Three, then you have to start moving to click. By the time you hit click, then it takes a minute for your orders to process. All this takes roughly around 3 to 4 seconds in order to go. 3 to 4 seconds when a stock is moving fast is a lifetime and a dwindling amount of money that you're losing because you had a mental stop loss. So this is why I do not recommend mental stop losses. Professionals that does this for a living will tell you the same thing. You do not do a mental stop loss. Put a hard stop loss in. If it taps you out, fine. No, so be it. If it goes down and it looks like it's coming back to your entry, there's a thing called the 84% rule. There's a book on it, a big ass book on it that talks about this. This book will tell you where and when and how to take this trade back so you can get in because this stuff does happen. Okay, so there's a book on this, and if you want that, I'll look into getting that link in and get you guys access to that book. I'm gonna tell you now that book is not my book. That book is someone else's book, but that book is the Bible of trading. Okay, I have this book. This book is amazing. This book will change your trading life forever. All right. But at the same time, it teaches you the basic skills like I'm doing now. It teaches the basic skills. Thing is, I'm just a little cheaper than the book. But the book is great to have. It is a must have. Anyway, um, that's it for me right now. We're not going to go all the way to 20 minutes. You see everything that we're looking at, right? You got the 1 minute chart, you got the 3 minute, you got the 5, the 15, 30, and hour to day chart. I changed this one over here from an hour to a day from time to time. Okay. I have 6 charts on this setup. All right. On the other setup, on the other screen, I have an order form that I do all my trades on. This is where I watch. All right. I watch each timeline. And here's another little golden nugget for you folks, real quick, and then we're going to end this. I find my entries, right? I find my best buy setups on the 1 minute chart. I then, once I find the best buy setup I can on the 1 minute chart off of this, off this setup, looking for my entry. All right. Once I find the best entry, let me rephrase all this. Once I find the best entry off my buy setup, there we go. Is that better? Then I will move over to the higher time frames, okay, so that I can hold this a little longer. Now, there's a difference between doing a good hold and a bad hold. A good hold is when it's going up, right, and you're moving your stop loss as it goes, right? Okay, uh, you're taking profits. So just we'll do this real quick. Just a quick little whoop. That's not the line. There we go. So basically, your entries here, your stop loss is here, and then of course, as the price is going up, you're moving up. You're moving up as it goes. You see, you got that. You see how you got that red candle right here, right, and it goes up. Cool. Now we can put our stop loss right there. It's going up. I got wiki wow. All right, cool. Now it comes down. Look, and now it's moving. See that right there? That is a fractal S curve. So guess what I'm going to do? Yes, there's a such thing as a fractal S curve. I'm going to move it up to right there. All right, she's going up. She's getting wild. She's getting wiki. She's getting to target 384.874. All right, he's getting to target. Woohoo! So as it's getting up there, I'm gonna get up there. I'm gonna try to get up there. I'm gonna get up there right here, right? Because she's getting wild. She's getting wild. Okay, I get tagged out. Fine, I get tagged out right here. What is that? 384.59. There you go. Took profits more than 2R, locking in profits along the way. Believe it or not, this is exactly how it works when you trade properly. Okay, locking in profits. As you see, She's already turned back. While we were doing it, she was turning the other way. Right. It's like a two-way street. We're going north. It's going south. So there you go. It broke the 200 SMA on the 1 minute chart, and it broke our intraday support line. All right, the intraday support line was only to give us an idea if it keeps bouncing, the probability of it getting to 384.74 for another possibility of a continuation to the upside 3 minute chart up to here. All right. However, it keeps rejecting the 200 SMA. So that is an indication right there. Here we are at 836. It is very possible this thing is going to continue down and getting over here to 380.38. This $3 dip, okay, or this gap, this $3 or $5 gap, It'll roughly range about $3 if we stay around this 384, 383 area. So $3 to $4 gap is might be just too much for people, right, that may have positions to be wanting to hold. So they may be selling. And if they're selling because it dropped $3, right, because they were expecting maybe it to bounce back after three hard falls, and that's understandable. However, that's not technical. Okay, that is a biased sentiment, not a technical sentiment. So everybody that bought calls or bought the SPY because they thought it was going to start making its way back up, maybe a few $3 or $4, obviously they were wrong because they're going by sentiment, not technicals. Technicals said back in the day, back yesterday, and I said it. I see this gapping down. Okay, before we even had market close, I said it yesterday during on our trading floor. I see this gapping down, and there you go, voila. How did I know? I use technicals. Technicals tells me what I need to know. I do not tell the chart what I think it's going to do. The chart tells me what it's going to do. My job is to analyze this thing and decipher it, decode it, all this silliness to get the actual language of the chart to finally get me to understand exactly what it's doing. And then finally it says, ha ha, I'm doing this. And then I go, ha ha, I got you. And then, of course, I drop my thesis and I look like a genius. But I'm just reading the chart, okay? And as long as you stay objective, I kid you not, you can do the same thing. You can be as long as you're objective, you can do the same exact thing. This is not some trick of the trade. If you want to become a great trader, right? If you want to become a career trader, quit listening to these foros or furus or whatever it is, these fake gurus that sit here and say, "Oh, I can make you $100,000 off of $30, or I can make you, I'll give you $2,000. I can turn your account to $2 million. What the hell? No, you cannot. Not overnight, anyway. But I guarantee that if you take your time and study, all right, study joyfully. Don't just study hard. Study joyfully. Enjoy what you're doing. Learn the history of this thing. And if you follow and like this channel, I promise you we'll do some history on this stock, on the market itself, not just tickers themselves, but the actual market itself, to give you a better idea of how to chart these things. And that'll give you a leg up. No expensive books, no expensive groups, no lies, no smoke blowing up your butt. Nobody say, yeah, nobody blowing so much smoke up your butt that it starts confusing your proctologist. You want this to be as real as it's going to get. You need somebody who's going to tell you exactly what you need to know, not what you want to hear. And here in this channel, Nikra's Bullpen, that's exactly what we do because our goal is your success. That is our goal. And that is it for me today. And I hope you enjoy this. Again, like and share, blah, blah, blah. Do everything you do. I appreciate it. I love it already. Thank you for even coming here, looking, listening to me babble. Okay. I am grateful, thankful. So as you see the SPY is still dropping right now. But if you're here on what the hell? If you're on Nikra's bullpen, if you're on Nikra's bullpen, come say hi. When you're in our Discord, when you're on the trading floor, one of the few things that you do get in our Discord, right, in our community, is you get to talk to the analyst. Okay, you get to actually have a one-on-one with the analyst on the trading floor. All right, that's something from what I understand is not a common thing. Being able to actually talk to the analyst and go over a few things. You get to talk with the analyst, and that's me. That's what you get to do. And I will answer as many questions as I can, but try to keep it to a minimum when I'm in the middle of doing trades because I'm either teaching or taking trades at that time. And at the same time, I'm trying to make sure that everybody is not getting in or chasing or worse, they're trying to get in the wrong spot, right? So that's my job as an analyst. My analyst is to not only analyze the chart, but analyze how you're trading so we can critique you and make you better at what you do. All right. I do not go on this Discord. Do not go on this Discord and say, buy here, sell there. That is not this Discord. This Discord, we focus on education. We focus on building your strengths to become a better trader. All right. Taking your weaknesses and turning them into strengths. First, we have to identify them. In order to identify them, we have to be able to talk and go over a few things. I have to be able to hear what you have to say. As long as you're truthful, we can make it work. All right, that is it for me. And again, thank you for showing up on Neeker's bullpen. I'm out. See you in the bullpen on the trading floor later on at 9:30 today. Ding ding.